Coming to you live from downtown Detroit, this is Benzinga's Pre-Market Prep. With your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day. Good morning, everybody. Welcome to this Wednesday, July 5th edition of Benzinga's Pre-Market Prep. I'm Spencer Israel, as always, joined by Joel Elconin and Dennis Dick. Hope you all had a very lovely July 4th holiday, but we're back with the markets today, and we are excited to talk about what's happening. Monday had some very interesting action around the close, and then even after that, I don't know if some of you probably saw the crazy quoting happening Monday after the bell. We're going to talk about that, and we're going to show a quote chart of what was happening there in some of these stocks. Amazon, eBay, not actually trading, but some very technical glitch caused some weird action there. We're going to talk about that. Going to talk about Tesla, Microsoft laying off some people potentially. The Momo continues to be the no-no. We have Michael Pachter on. He's our guest today at 8:35. He's an analyst at Wedbush Securities. He will talk about tech stocks, Facebook, Netflix, video game stocks, and all that jazz. Joel, how are we doing in the markets this morning?
S&Ps are showing a little bit of strength here. We had a session that started Sunday night, went through 1 o'clock yesterday. So I'm going to give you the parameters from that session. 31.25 on the upside. That was your overnight high. On the downside, we got down to 21.25. And folks, 24.20. Let's call that a major support level here on the downside. Everything is rosy until we take out that level. Crude snaps its winning streak here, down 57 cents at 46.52. It's kind of a quiet rally from the lower 42 handle. We'll see with the data this week if that rally can continue. And gold and silver taking it on the chin. Gold down a couple bucks here at 12.20.10, and silver under $16. So we'll take a look at the precious metals a little bit later in the show. Dennis, kind of disappointed in your finish at the hot dog eating contest.
I actually, they have a hot dog eating contest up north here, and I thought about going in it once. I think I could eat quite a few.
Really?
Like, I think I could probably eat at least 10 with the buns.
Really?
Now, 50 or whatever they are. Oh, so, okay, Spencer, I know you follow this closely. Enlighten us on, the results of the famous Nathan's hot dog eating contest.
Yesterday, yes, I'm an avid watcher of the Nathan's hot dog eating contest every year in Coney Island, New York. Yesterday, Joey Chestnut came through again, his 10th title in 11 years, 72 hot dogs and buns in 10 minutes, which
How do you eat? Stop, though. How do you physically do that? Like, eat 72 hot dogs? Like, they can't be chewing. They must just be pushing them down a big throat or something.
No, you do chew. So what you do, what some people do is they will break it in half and then eat the halves simultaneously, and you dip the buns in a liquid, in water, and then it makes it mushy, and you can just throw the mush down your throat. You laugh, but that
72. How big is this guy?
He's not big. He's, I don't know, 6 foot, 160 pounds. He's not a big guy. He did not set a world record, but he did set a July 4th Coney Island record with 72 hot dogs and buns in 10 minutes. And so that was on the men's side. The women's side, for the 4th year in a row, we have Miki Sudo, 41 hot dogs and buns in 10 minutes for the women, and she won her 4th championship in a row. So it was the chalk won, and Kobayashi was not there before you ask. So
how many do you think you could eat, Spencer?
I could probably do 10, I think.
That's what I'm saying. I think I could do 10.
I think 1 a minute is.
And then I think my stomach would explode.
I think 1 a minute is reasonable.
Maybe 1 a minute's reasonable. 10's probably, but these aren't like little hot. The Nathan's ones are the bigger hot dogs too, aren't they? These aren't like little hot dogs, like the little Oscar Mayer package ones.
No,
right?
but they're not the huge ones you're thinking of either. They're they're in between.
Okay. Anyways, that's absolutely incredible. I mean, eat so many hot dogs.
Not to get a little vulgar on the show, but I mean, how do they keep these things down?
Well, you have to. You're disqualified if you throw up.
Really? So
does anybody sit there and throw up?
No,
like,
no, they're not. They're not allowed to.
These are seasoned veterans here.
These people train. You can't. You literally can't.
They got the wrong job, Joel. In training.
Oh, man. I read that one guy in training, and I don't know if he's the guy that got second, how he was training. He was eating 4 pounds of potato salad a day for lunch. Is how he was saying.
Well, they have to.
They're expanding the stomach.
No, that's exactly right. They don't fast.
Working out the stomach muscles.
They don't fast. They stretch their stomach out so it can fit more food. That's how they train. So that
is crazy. Now, yeah, Kobayashi was the one who started all this back in the day, wasn't he? He was the one that first cracked 50.
Yeah, he was the first to crack 50, but he's been unseated. Joey Chestnut has won 10 in the last 11 years.
Joey Chestnut's the guy now.
Yep.
Kobayashi, does Kobayashi even enter these things?
No, he doesn't compete anymore. He is at odds with the Major League Eating organization. So, and yes, there was a
and I was telling you on the pre-market show, best Google video that I saw from Kobayashi was when he tried to take on the black bear. So it was called Man versus Beast, and they had like a ring, and they had the announcer and everything coming off, and Kobayashi comes out, and it's going to be who can eat the 50 hot dogs the fastest. So Kobayashi's out, and they send him down. Then they bring in the black bear, and the black bear goes into his ring, and they got the 50 hot dogs in front of the black bear, the 50 hot dogs in Kobayashi, and they kind of go, and they release the bear, and basically Kobayashi's pounded, and he's up like at least like 10 hot dogs to none. The black bear hasn't even found the hot dogs yet, but once the black bear got a hold of the hot dogs, he ate his 50 in like less than a minute. That black bear was just pounding hot dogs, and so Kobayashi got killed. So I will say right now, if they bring Joey Chestnut versus a black bear, the black bear is going to win. They eat fast.
All right, well,
1,000-pound black bear versus a 100-pound human. Who can eat the hot dogs the fastest?
I'll have to
Crazy.
I'll have to look.
Okay,
that
we wasted 7 minutes on a hot dog eating contest.
No, we didn't waste it. We learned something.
That increased our ratings right there. All right, so let's talk about this bad data glitch on Friday, or on Monday actually would be. Feels like it's Monday right now because we had the holiday, but okay, so we had an early close of 1 p.m. Extended hours closed at 5 p.m. So that's your after hours session that typically goes 4 hours after the market close. That closes at 5. So I'm long gone. And then I read an article that night, and it's talking about Apple trading up. I think it was a Bloomberg. It's talking about Apple trading way or Amazon trading down, and I was like, I gotta go check the tape. So I log into my computer system, and I'm checking the tape. And I'm like, holy cow, there is trades here. And if you can show the screenshot there, I look at Amazon, and it's got Amazon trading down at $247, down 700 points. And I'm looking, I'm like, what is this? I'm like, first of all, this is at 6:30. I'm like, the exchange closed at 5. I'm like, but there's all trades on the tape. I'm like, this makes 0 sense because the exchange wasn't even open. I'm like, these can't be real trades. I'm like, first of all, the prices are ridiculous. But secondly, the exchange wasn't even open. So I'm like, I don't know idea what's going. But then I started tweeting out because people were saying, that these bad trades occurred. I'm like, there's no way. These aren't real trades because the exchange wasn't even open. So then later, NASDAQ actually comes out and says that they were sending test data out because they typically do their testing after exchanges are closed. And somehow that test data went live to the third parties and got put on the tape. So all these, trades that were basically just tests were put live out on the tape, and it actually was changing, the prices on like your Yahoo Finance quotes and stuff. So people were probably very scared when they saw Amazon trade down 700 points. You can breathe a sigh of relief, though. These trades actually weren't trades. They did not occur. This was simply just test data by the NASDAQ that went out erroneously.
And the lesson here is if you're looking at Google Finance or Yahoo Finance who had the messed up quotes, the lesson here is just double check with the exchange itself because NASDAQ always had the correct quotes. NASDAQ.com. So,
yeah, this was not real. These were not real trades. Although when you look at it, and you can see, we've got up a screenshot there on the pre-market prep show. You can actually see it looks like there's actual trades occurring there. They've got multiple trades. Not like it's just one price. They had multiple trades occurring from 6:30 to 8 o'clock. Some actually even after 8 o'clock, which, there's exchanges are never after 8 o'clock. They always close at the regular time there. So that was a tip off there too. But don't panic, Amazon. None of these trades actually occurred there. Although a lot of people over there in July 4th weekend probably were throwing up when they saw that Amazon had traded down 700 points.
Yeah, they've cleaned up the tapes here and the charts. At least the charts here on Google is not reflecting any of that activity. We were talking with our editor Chubbs on the pre-market show, and he says this is not that out of the ordinary. Sometimes when they're working after hours and they'll see something and they'll be like, "What's going on in this stock?" And it will just be a bad code or something else on the wires. But all is well here. Just speaking about these momos here, Dennis, they all are in the green now. Apple, Microsoft, Google, Amazon, and Facebook here. But talking on Friday and Monday, these charts are just not looking that good.
No, we talked and we were saying, we've been saying it for a few days that these tech stocks. So, and we used Apple as an example when we were talking on Monday. We also used, I believe, NVIDIA as an example. And we were just saying, you had the big whoosh down in a stock like Apple. And then you've had this period of consolidation for a few weeks, but it's not coming back. And that's my major concern, not so much that we were selling off over the last 2 or 3 weeks. We've kind of just been holding steady, but we aren't bouncing back, and the overall market has been holding up well. And you still continue to see this rotation. And the rotation is moving into different types of stocks. We know biotech got hot in the last couple of weeks. It's been the beneficiary of some money. Well, the rotation got really hot there on Monday because we saw a lot of money rolling out of tech stocks. We saw the Qs trading down, yet the Dow was up 200. And people are like, what the hell is going on? Well, it was simple rotation from growth to value, and especially from tech to value, because you saw stocks like Berkshire Hathaway trading up almost 2 points. Even tech stocks like IBM, which would be a more value tech, was trading up. You saw stocks like General Motors and Ford, helped by the auto sales, but those were trading significantly higher. Dogs like Macy's were trading up over $1. So you did. And the DIA itself was trading up as well. And then you looked at stocks like NVIDIA and stocks like Apple and stocks like, and Apple not so much, but NVIDIA especially. AMD was getting hit there. Stocks like Alibaba was down just a little bit there. But there was a lot of money coming out of the momos on Friday, or on Monday. I keep calling it Friday.
No, it's with that holiday. Noticed on Apple over the holiday here, you had the big decline on that Tech Rec Friday. And the market rebounded to make new all-time highs, but Apple was not along for the ride. Couldn't even get over, what was that, 148. I think that was a level Nick was mentioning. The high of the rebound has been 148.28, but you have to be paying close attention here if you have any Apple shares or following the market as a whole. This 142 level is huge. We've had a couple spike lows down there, low the move at 42.21. Now safely above it by $2. But just looking at the daily chart, the big bounce, the consolidation, nothing compared to the S&P's 142. We're I'm gonna mark that down on my sheet right now. That's a huge level, especially since you didn't get that the bounce like you did with the general market. So.
And these trends can be pesky there too, Joel. Like you think, like you look at a stock like Apple that, it's bouncing here this morning because the overall market's up. But I wonder if we start seeing a separation again here. I know the Qs have come back. They were trading red earlier here, but I like the 2-day moves, and we've definitely seen a big, move from growth to value on Monday. And I wouldn't be surprised if that trade starts to continue again here. So when you're seeing this bounce in the Qs and you're seeing this bounce in NVIDIA, I think, and the bounce even in Apple, I think you're going to have a few people that are looking and saying, look, I might have been wrong here. I want to lighten up. There's still a lot of people that are up a lot of money in a stock like NVIDIA. Look at the chart of that one. From May, we were 105. We got up to the ridiculous level of like over 165, and Citron gave it the beats with his tweet. But I'm looking at it here at 140.67 this morning, and it's still up 35 points in the last month and a half. I mean, there's still a lot of meat on that bone if you're looking, at, possibly taking a short trade.
Yeah, 140 level in NVIDIA. Microsoft, I'll give you the level there. We have some news on that. We'll have Spencer give it to us in a minute. 68 is just critical support here for Microsoft. Keep it on with the big boys here. Facebook, I think you got to give it down to 145, 144 and a half, 145. The Goog chart is, whatever. You look at Goog or you look at Google, look at that. 3 big down days. That 900, look at that. You got a gap between 80 and 900. And then to finish off the big boys here, Amazon, Man, it had that one rebounded to make a new high after the tech wreck, but I guess you got to give it to 925. Yeah, that was what a fake out move there. What was that?
What about Tesla?
Oh, Tesla, this one.
That had the big up big on Monday because of the announcement over the weekend of the model. So it was trading up. It opened right at the highs, Joel. 370, and they just pulled the rug out from underneath. It fell 20 points.
And you know what we talked about on that? We talked about the move from 387 and the former low of the move, which was what, 354. Let me get it up here on the other platform. Take a look at it. 387 down to what was the former low of the move was 354. So that's at what, a 33-point move. Let's call it 16.5. You add that to 54.10, right up to the 372 area. That was the 50% retracement. Didn't quite get there, but the big boys were definitely keying on 371 and anything above 370. Friday's high, 371.36, and then you drop $20. But it's we'll see. We'll see if the next week can get it up. But that is a very, very bad day for Tesla and Goldman. They lowered their price target on it right today, Spencer, from 190 to 180. So I don't know. I think they're still a little bit off on that one. But tech wreck continues on Monday.
Yeah, well, and we'll see what happens here. If that continues or not. It's still trying to find its bearings. Whether these stocks want to go up, some of these stocks want to go down. But I'll tell you, obviously, the money wasn't flowing out of stocks altogether. It was definitely, like we said, flowing into some of the value names, some of the names that have been beat up. And you won your bet, Joel. Ford, you won your bet finally because it actually got up there. What'd you give me? By like a half a cent or something?
2 pennies.
You got me by 2 cents.
Yes.
So anyways, Ford, and we talked about it on Monday too, that the chart was starting to look pretty good, boosted by the sales, but we were saying maybe that can drive it out of the range. I mean, both GM and Ford both took off and took out the upper end of their range, and they're looking, it's looking a little bit better right now, at least for those couple of stocks.
And there weren't great auto sales numbers either. And Dennis, you had a little bit of fun in GM on Friday, right? Or Monday.
Yeah, I bought the open and it was released. So the auto sales came out right at like 9:30, the GM auto sales. And I'm like, oh, I hate that when you get new information and all of a sudden, you're in the position and it's kind of on you because if the sales are bad, it can go down there. So I'm like, I need to lighten this up because I bought a whole pile of stock because it had opened down 50 cents right as those sales were released. I got a 34.52, and I actually made a little bit of money because obviously it started trading higher immediately. But I was scared. I didn't know how they were going to interpret it, and the thing just blasted off. So I should have held on. Moral of the story is I guess I should have held on at least, give myself. But it was really thin at that time, too. Like you were saying, I was looking at a pretty wide market. I had a pretty sizable position on. So, I made, I think, 15 cents on it or 17 cents. Obviously, the stock went straight up $1. So, over the next half an hour. So, kicking myself that I didn't hold on to at least a few shares of General Motors.
All right, they have been in the trading range. Look at this, the daily chart. Firmly cleared 35 here, getting up to 36. Another whole number holding. We'll see if we come back to 35 and hold. As far as Ford goes, it did hit the range. I did win the lunch bet. I am now up 2 lunches on.
No, not up any lunches. I think they got you back to even.
Okay, well, that's good enough.
Maybe. Oh, no, maybe. See what he does? I think I was up 2 lunches, and he flips the script, and then he got a lunch from me that way, too. That Joel's sneaky.
We're even. It's the start. It's the second half of the year. It's the second half of the baseball season.
Hey, you watch.
We'll even. Ford had that nice. Let's see if it has the guts to get up to 1180. It had a double top there. Long consolidation. I guess if you're keeping an eye on 1120, you would have been able to pick that up on Friday. But nice continuation move here. In Ford and GM off some not so great numbers.
You know what other stocks I was looking at was the solar stocks. And, obviously I talked about that. I bought CSIQ in my invest portfolio. Just a few weeks ago, pretty glad I did it because I'm already up over, well, $16 here now from in the 13 handle that I bought it. So I'm pretty happy about that. But First Solar too, FSLR. This one looks kind of just like it's hanging out, and just about the opposite chart of some of those Momo tech stocks. Because here you got First Solar. It's had a nice little run up of 4 points there. It had back when it went up in 3 days in the middle of June, or June 21, June 22, June 23. Now you've had like a week and a half, or 6 or 7 days of digestion. But, if you think this digestion period is going to be the follow through of the original move, that could take you up to 45, 46. I kind of like the setup here for First Solar.
And the fact that it hasn't gone back down, I think, is what
I like this. I like this setup. It feels the opposite of some of those Momo stocks. So I don't know, the solar stock's been forgotten for a long time. Maybe money could be rotating over there.
I mean, anywhere, but it out of the tech stocks, in the banks, in the solar. Looking at the weekly here in the First Solar, I just want to tell the folks, last week we hit 41.17. We've stalled at 40.87 so far this week, and that coincides with the big candle you had back in November of 2016. 41.25 was your high, so let's just call it, make it even, 41 even. Big level for First Solar. And do you have a target on the CSIQ? Was it 17?
No, should I?
Well, Gordon had one. That's the reason I mentioned it. I thought it was like $17 or whatever. But
I stuck it in my investment portfolio. I'm bad like that. When I get in my investment portfolio, I just kind of forget about them.
Yeah, it's $16. I mean, that chart's looking good too.
It looks itchy too, man. And in this, I don't want to say that much because I own it in my investment portfolio. But I like these charts of these solar stocks right now.
Yeah, you get an upgrade or something like that. And 16 looks to be a good level here in CSIQ.
Speaking of upgrades, downgrades. Okay, one interesting one here before we jump over to the big ones. Just because my hometown, Afria, Leamington, Ontario, where I was born, obviously, APHQF is Afria, which is the big marijuana stock down there. And it's one of the bigger ones in Canada. It's actually getting upgraded to speculative buy at Canaccord here this morning. They're putting a price target of $6.75. So usually when you see some of these small little speculative companies, and it's more than maybe speculative now, it's actually got operations. It's making a little bit of money on the marijuana sector. Getting a price target, getting coverage from one of the big boys, it's kind of sometimes boosts the stock. Now, Toronto doesn't have a pre-market. So we obviously don't see what this is doing. There's no pre-market here yet, but I would think it gets a boost from this today. So I think Afria shareholders might be happy here today.
Why don't they have a pre-market?
Toronto never has. They open at 9:30. No pre-market, no after hours in Toronto. I would love it if they did. I would actually trade that if they did, but I think there'd be some opportunity there. But no pre-market in Toronto. They give you indications. They'll send out indications and stuff, but there's no trades before 9:30.
Yeah,
the exchange.
That sector's been quiet. I did notice GWPH did pull back off its highs, found support at the $100 level. I guess that had a big pullback from 135 and change. Actually, it was lower. It was under 95. I guess we're waiting for another update on Epidiolex. Is that that's their big drug there? But at least if you're trying to take a stab at the $100 area, maybe cut out under 94. That looks like the low of the move. Long sell-off here, and I don't know. I guess it's a pod stock. I guess it's not really a biotech. I mean, it's I don't know where exactly you put it, but looks like it at least is finding support.
So, and then just jumping over to some other upgrades, downgrades, because there were some big ones here this morning. Let's go Oracle. Oracle is getting upgraded here this morning at KeyBank to overweight. Just looking at this one, though, it broke. I mean, this chart was classic breakdown here on Monday. You had multiple lows right around the big psychological 50 level. We took it out on Monday, didn't look back, went down to 49.32. Now you're bouncing right back up. It's a nice setup here to actually fade KeyBank, I think, just looking at it. And I own Oracle in my investment portfolio, had it there for a better part of a decade or maybe even longer than that. But just looking at it from a technical standpoint, I mean, old support becomes new resistance.
I think I couldn't touch this one until it got at least filled that gap from earnings. It's kind of a tough call here out of KeyBank. You made a high on earnings day at 51.85. That was catapulting for the 46.33 close. And then it gave you two other shots there, 51.83 and 51.70. Those were the highs the following 2 days, and then 51.45. So it definitely found a seller at the 52 level. Now they're stepping down. 50.13 is Friday's high. I think I'd take a shot there on the short side. I don't know. I mean, I just don't see a reason for like chasing the stock, buying it at, at 50. I mean, where's your stop? That's the thing. If you're buying this even long term, you got to have expectations that it could eventually fill that gap. So maybe
that's an ugly gap.
Yeah, that's an ugly gap to fill. So
especially when they're selling tech stocks.
Yeah, hot tech stocks.
Now, Oracle doesn't really fit the definition of a hot tech stock, but although I guess as of late it has, but I wouldn't consider Oracle one of those classic like NVIDIA Momos.
No.
I would think of it more of like a value tech stock, but it's got a dividend too, 1.53%. But that chart just, I don't know. That chart just doesn't look that appetizing to me, especially from the long side.
Yeah, a lot of people trapped too above $50, buying it on the breakout. So if you're trying to sell on a rally, you're going to have some company.
This one's a big call. Teradyne upgraded to buy at Stiefel here. TER is trading up about 1% in the pre-market. Stock's been going straight down, so they're trying to call the bottom, obviously. 29.69 the low. Closed 29.69, 29.68 the low from Monday, so basically closing right on the lows. Stock trading up here in the pre-market, gets up over 30. I mean, if you could get it a green bar, maybe take out the high there from Monday, maybe you got a shot here. But again, it's a tech stock, and tech stocks haven't been in favor right now.
Yeah, I mean, overhead supply here, everyone that was, trapped between 35 and 36 is certainly looking for an out, 34 and 35 rather levels. Just not a big fan of, trying to buy this. If you're going to use that $30 level, just below that, that was your, could be a stop. 29.69 was the close. So I don't know. I can't get on board with this one either.
COF downgraded to underperform at Raymond James. We know that was the only financial company that actually had to resubmit after their stress test there. So we saw it get hit a little bit, but it bounced right back. And here it was closing, moving along with all the financials, moving a little bit higher. I mean, it's still a financial, but this might weigh on it a little bit today.
It did. It made a nice rebound on after the stress test. 83.20, trading down 36 cents. I could be keeping an eye on that low from. Have we taken that low out from Monday? Yeah, we have 83.22. So, man, this thing needs to get back above the low, above the close, or easily you could see this thing in the 81 handle. Friday's low, 81.59. Then after that, you're getting into 80.47. So, I don't know. Not in love with this chart either.
And then one more I had on the list, Buffalo Wild Wings getting downgraded at Stevens, BWLD. No real trades here, just a couple odd lots going on at 127.80. But the chart is interesting here because you've had a pretty significant down move. And now you've had a quiet consolidation. That's what I like. I like to strike when you've had this consolidation period. And often when you see the consolidation of a down move, sometimes you'll see the continuation of that move. That could take us down to 120 because they'll move from 140 to 130, then consolidating here and 125. I don't know. I don't mind this call from Stevens actually downgrading it here because I think if it takes out those lows, I think Buffalo Wild Wings could not be so wild.
We've seen this multiple setups where stock just comes down after a big decline, and then it just kind of, stays there, and you're thinking, okay, the bottom is in. 126.30 represents the low of the move. Buyers stepped up a little bit on that on Thursday and Friday at 126.5. So critical support on this one. I think on the upside, if you want to buy this thing on strength, at least wait for it to clear 130 and close above 130. 130.20 was your high from Friday, but Buffalo Wild Wings, 120. That was a couple monthly lows in 2016 in the middle of 2014. So big level to hold in BWLD.
So it's been quietly very weak from its highs, which were, did we ever get to 200? Buffalo Wild Wings? Close to it.
Let me see. I see.
Yeah, we did.
Yeah,
we got to 205.
205.
Back in September.
Yeah.
When it just got ridiculous, and things cool off. And this is a cooling period here for Buffalo Wild Wings. It just got overdone. Lots of symbols coming from the chat here. Jared wants to know about Blue Apron. We obviously don't have a lot of data for that because it hasn't been out for very long. But, we can do a technical on anything. I know Joel can find some levels here for you. It actually finally got, a decent little run up in the afternoon on Monday, APRN, but chart hasn't been that pretty.
It had a hard time off the IPO. They priced it at 10, got a nice boost off that to 11, but now you're back under that initial opening price. So, man, the underwriters that tried to defend it didn't do a good job so far at $10. 888. Let's see if you go into reverse here, if that nice round number of 9 comes into play, because 888's been the low of the move. And then if you're looking for a retracement, that will take you right 50% retracement and take you back to the $10 level. I mean, I want to try it. I mean, I hear it's pretty good. Everyone's, panning it because of the competition. But maybe we'll have Emily try that in her new digs. But I hear there's good food. Everyone's worried about the competition.
Dr. J wants to know about Baidu, B-I-D-U. Stock's just been quietly hanging out between 175 and 180. I would say it's kind of range bound here if I'm just looking at the chart. Often I'll look at Alibaba because those two stocks sometimes move together, but Baba's been doing a little bit better than Baidu as of late. What are your thoughts here on BIDU?
Real quick, I want to jump in. Baidu announced an alliance with over 50 partners this morning, including
it's up. I didn't even notice. Yeah, you're right. It's up $6.
NVIDIA, Microsoft, and others, to name a few.
A big pop here. Yeah, so we're out of that range.
Yeah, we're out of that range.
I pull an Nick Shaheen. You got to check the pre-market action before you start talking about the chart.
186.88 is the high of the pre-market session, hanging here at 186. So probably not a lot of volume associated with that. So I'll keep an eye on that pre-market high for a continued move. Basis the daily charts. You came down hard off 192.50, basically down to 177.50. So a lot of air there, up to 192.50. We'll see if any people are going to take an opportunity to get out of some stock here on the rebound in Baidu.
All right, I just want to give you a quick imbalance look here. They just came out at 8:30, and I'm just trying to grab those numbers for you. Nike, 138,000 to sell. Nike actually was giving back a little bit. We know it had the big pop. It's kind of had a quiet day there on Monday. I'd be concerned if we took out Monday's low, 58.33, and that's right where we are right now. We actually were just trading down at 58.01. They really hit it hard when that imbalance data came out. I think they maybe overshot a little bit. I'm going to see 100,000 to sell it, like, oh, it's going to get killed, but it's come back from that already. It's at 58.26 here now. So 138,000 to sell Nike. Sprint is 80,000 to buy, but that's an $8 stock. Bank of America, 119,000 to buy. JP Morgan, 56,000 to buy. The financials look like they're catching a bid here again early. Kroger, 46,000 to buy. Pfizer, 81,000 to buy. Disney, which had a good day on Monday, 47,000 to buy on Disney, so some follow through there too. Alibaba, 30,000 to buy. Baidu's probably helping that one. And Coke, 64,000 to sell. So there's a few there. They're not that big. Nike's the one that stands out to me.
Nike looks like if you haven't taken profits the last 2 days, you're going to have some competition in doing so. I just wanted to point out on the charts here in Disney, rumors on Friday, I believe it was Friday or Monday, about Verizon
it was
being
Monday.
Yeah. But you got a nice level to keep an eye on. 108.60, you had 3-4 highs there back at the end of May. Friday or Monday, we're going to get this straight. 108.62 was your high. So that's a major level to keep an eye on. Still a buck away in Disney. We still have just a minute or two here before we bring our guest on. And coming out of the chat from Downward Dog is talking about Lowe's, LOW. Let's just take a quick look on the chart. I know it got hit after earnings and made a little bit of a comeback. Not a lot. I don't know. 76, it did fill the gap. I do like that. So keeping an eye on the long side. Lows, but Dennis, any thoughts on?
You know what? Just Home Depot, Lowe's. These are two stocks that have been very resilient. They've stuck, fairly near their all-time highs for a while. I mean, Home Depot's all-time high got up to 160.86. That's kind of a blow-off high, and then tried to get back up there just a couple of weeks ago to retest, but only got up to 159.22. Now it's 150. He's starting to form some resistance here in the 155. He's starting to get some overhead supply. You're starting to get some doubters here. That this stock can continue to run like it has. And putting it in perspective, this was a $119 stock back in November, and this isn't like a new growth stock. It's Home Depot; they're everywhere here. So I think it's been a pretty impressive run, and I think you might go into a cooling period for these stocks too. So not a fan of the Home Depot chart. The Lowe's is beat up a little bit more, but I still see a lot of overhead supply there too. So I don't know. I think you might get a better price here if you're waiting on those two.
And Kraft Heinz has just been getting annihilated here. 88.
You know what all the food stocks have, and actually just recently, I think it's something to do with interest rates there too. Utilities have started to really get hit the last few days too. But you're starting to see some of that stuff that's yield sensitive. The banks are taking off, and the stuff they're actually, the market's starting to look like it's pricing in maybe that the Fed is not done this year.
All right, let's take a break here. Bring in Michael Pachter of Wedbush Securities and get on the recent action in the market. We'll be right back with Michael.
All right, welcome back, everyone, to Benzinga's Pre-Market Prep. I'm Spencer Israel here with Joel Elconin and Dennis Dick. We're on the line with Michael Pachter, Senior Equity Analyst at Wedbush Securities. Michael, how was your July 4th holiday?
Oh, too much sun, but too much food and drink, so I'm recovering slowly.
All right. Well, glad to help your recovery in any way we can by talking about the markets. Looking at your coverage universe, you mostly cover tech stocks, social media, video game stocks. So we're sort of in between earnings seasons right now. Give us your overall thoughts on how the stocks that you cover performed last quarter and how you expect them to perform in the coming quarter.
I think the market has kind of shown us that people really aren't focused on current results, and I think people are now beginning to look out several years. So the higher flyers are those that have pretty good prospects for growth for the next several years, and the ones that are just getting killed are the ones that investors are just convinced don't have prospects for big growth. So you're seeing stocks like Pandora at pretty much an all-time low. I mean, it's rallied recently by $1 or so in the $7 range just a few weeks ago. Stocks like Twitter just can't even think about getting back to their IPO price. And on the other side, companies like Amazon and Facebook at all-time highs with multiples that probably exceed what most people would think is their earnings growth rate. And that's because investors are convinced that those companies are going to continue to grow at a really high rate, Netflix among those. So, I don't know that the current quarter or the coming quarters makes that much difference other than as an indicator of whether they're still on that growth track. Amazon in particular, I don't think anybody cares what they print. So as long as they, come in around expectations for earnings, the company's going to be fine. And I think that with the Whole Foods acquisition, they're going to grow a lot faster than people think. It's going to take a few quarters before they're equipped to ship out of the back of the store and start doing online delivery from each of the 440 domestic locations. But that'll happen in the next probably 6 quarters. And so you're going to see pretty phenomenal growth when you start adding grocery to Amazon's arsenal of retail carnage. I think that companies like Pandora, the flip side, there aren't any near-term prospects for growth. We just essentially wiped out their entire management team. I was looking back to their investor day last October, and I can only identify one executive who's still there, who was on stage for the Q&A session out of about 5 or 6. So everybody gone, and the interim CEO is a CFO that got there on February 27th. So investors just don't have any roadmap for Pandora turning it around, and the stock kind of stays down here in the dumps. I mean, nobody really is interested in it. So I think those are much more interesting stocks because we all know Amazon's going to dominate. We all know Facebook is going to keep chugging along. I think we're all pretty comfortable that Twitter has no clue what it's doing and it has the same management team. But a company like Pandora, I think if their new investor, SiriusXM, is serious about its investment and they're in control of 16% of the stock with an option to go higher, I think you're going to get really high-quality managers in there, and you're going to see that company start to grow again.
Michael, what about Netflix? You're sticking with the sell on it here, and the stock has been pulling back recently fairly significantly. We were up at 165 just a couple of weeks ago. Now we're down here at 146. What are your thoughts still here on Netflix going forward?
Yeah, I actually thank you for the question. I've been wrong for, 6 years, so I'll stay wrong for a little while longer. They're going to absolutely destroy the quarter. They're going to kill it. So, since you asked about quarterly plays, the trick with Netflix, I mean, nobody questions that they're going to be the dominant streaming service globally. I think that not enough people question whether they'll ever make money internationally, and I am in the camp that will never happen. They are so far from being profitable internationally, notwithstanding that they talk about contribution profit break even. So the basis for my sell rating is that the way they calculate their contribution profit, they ignore all their tech spend, which is over $800 million a year. It's a meaningful number. It's $1.50 in earnings per share all by itself. And I think that they are very aggressive in how they account for their content spend. They don't expense as they go. They assign long, useful lives to a lot of shows that they produce that are actually crap. And by crap, I mean they've just canceled their 4th one, and we have yet to see a write-down. So they cancel shows, and they don't write down the unamortized balance. So I think that the accounting is quite suspect. But with that said, investors pay for subscriber growth, and Netflix did something I think that's especially brilliant. They lined up what I would call murderer's row of their most watched content, and they started new seasons beginning early May, and pretty much every week from early May through late June, they had a new show come out that people actually like. So Master of None is in there. That's that's a Aziz Ansari show. Big viewership in blue states. Anyway, it's a pretty liberal show. Kimmy Schmidt is a pretty good show. Sense8 they canceled, and Bloodline they canceled, but those came out in that run. And then culminating with House of Cards and Orange Is the New Black, which are their 2 most watched shows. So they managed to bunch these shows, and the release dates in prior years had been as early as early February. So bunching them in May, June. June is the quarter that they typically have a lull in domestic subscriber additions. And if you think about how they report subs, net adds is the sum of gross additions, gross new subscribers, minus churn. You keep churn down by putting shows out that people want to watch. So I think you're going to see record low churn in June. Of course, Netflix doesn't disclose that number, so we will never know. But I think record low churn means we're going to probably have close to a record for the June quarter for domestic subscriber net additions. And when you see that, I think investors are going to love this story again. The stock is probably going to go up 15 or 20%, and I'll be beat up by guys like you for having a sell rating and a price target half of where the stock is right now. But again, near term, I love it. I would own it into the print, even though I haven't underperformed, because I think ultimately this thing is just not worth where it's trading. And I think that if you kind of value it on a discounted free cash flow basis, you'll come up with a price target well below 100.
We're on the line with Michael Pachter, equity analyst for Wedbush Securities. Michael, I just want to go a little bit deeper. You said that they're not going to derive the profits out of Europe that they're expecting or forecasting. Is that just the acquisition cost to get set up there and move, or what? Really, could you delve into that a little bit more for our viewers?
Well, it's primarily content costs. So you've got a company with around 450 million shares, and they capitalized last year almost $3 billion in content spend. And by capitalize, I mean that their balance sheet, their long-term content library grew from $4.2 billion to $7.2 billion. It was just under $3 billion that they didn't run through the income statement. So think about 450 million shares and $3 billion of spending, and then apply whatever Netflix's tax rate is to that. You end up with about, $4 or $5 or $6 of overstated earnings, and they didn't even make $1 last year. So they're losing money. And if you look at free cash flow, it was negative $1.7 billion last year. They're expecting negative $2 billion this year on 450 million shares. Well, there's just a disconnect. They earn profits, and yet their free cash flow is grossly negative. How is that? And the answer is they have determined that the shows that they're creating have long, useful lives, and therefore they're not expensing them as they produce them. They're capitalizing. And I'm saying that the stuff they're producing generally is crap. Some of it's good, but most of it is not. The shows that you can name, they don't own. They don't own House of Cards. They don't own Orange is the New Black. They own Flaked. They own The Ranch. Have you seen those shows? No, you haven't, because they're crap. And I'm not saying they're crap because I'm a movie critic or a TV critic. I'm saying it because you can look up the average reviewer score on Metacritic.com, and you will see that most of the originals they produce have review scores under 60. That's pretty bad. They do have one original that they produce that has success with consumers called Stranger Things, and I'm not going to give you the spoiler here. But when the first season ends, I don't see how they make a second season. I thought season 1 was great, but when it ended, I'm not sure what they're going to do for an encore. So we'll see, but I predict this is another one they're going to cancel in the next 2 years because I don't think they can keep the story going. And the reason I say that, it's hard. It's really hard to make compelling television and have multi-season series. That's just not something that happens that frequently. And Netflix is trying to do it when CBS, ABC, NBC, Fox, HBO, Showtime, Starz, AMC, everybody else is trying to do it too. So they're competing for, I think, a very thin talent pool. There will be better shows produced overall because there's so much demand, but there will also be a greater number of flops because there's so much demand, the supply is increasing. And Netflix doesn't have a competitive advantage in selecting the hits. I just don't see it. So my bias is they're aggressively accounting by capitalizing $3 billion a year in content costs. Eventually, that has to run off their balance sheet and depress earnings. And when it does, I think investors will finally wake up and see that this company doesn't have the earnings power that a $150 share price suggests it should.
Hey, Michael, one quick question, one more about Netflix at least. I see these stories that people are upset, people get upset when the various shows that they like are inevitably removed from Netflix. Most recently, the one I'm seeing was Futurama, and fans are super pissed off that Futurama was taken off Netflix. Any legs to this as far as impact to the stock at all, or the bottom line at all?
Well, I mean, on the one hand, you want to compliment Netflix for exercising financial discipline, and clearly the rights fees for Futurama were probably higher than Netflix internally determined, would generate a rate of return. So I get that, and I think that's just part of the business. And the number of fans that are upset, obviously, they're vocal, but they're probably not that high. If Netflix concludes, we can't pay, let's just say, $1 million an episode because in order to pay $1 million an episode, we need 1 million viewers, and I'm making those numbers up. And if they only have 500,000 viewers, then you're not pissing off enough people to worry about. I mean, the cost isn't worth it. That's inevitable. And what television has turned into on the streaming side is everybody gets exclusives. So Amazon will take a show that Netflix gives up and vice versa, and Hulu's in the mix there, and you're getting guys bidding on television shows. The producers of Futurama aren't stupid. I mean, they hold out for a price from Netflix. If they don't get it, they'll go to the next bidder until somebody picks it up. So you tend not to see these TV shows disappear completely. And ultimately, I mean, what viewers are being trained to do is subscribe to everything. Be an Amazon, Hulu, and Netflix subscriber and get some rabbit ears, and you're pretty much, able to see everything that's ever been on television. And, if you're a cable subscriber, as I am, and you're a subscriber to all three, as I am, I can watch anything. I think I can watch I Love Lucy. I think everything is on TV. So, again, people think that for their $9.99, they should get every TV show ever made instead of paying a $100 cable bill. That's just stupid. And, complain away. That's like saying we're upset that McDonald's doesn't serve ribeye steaks. We want a ribeye for $1. Get over yourself.
All right, Michael, before we let you go, a big theme in our show over the last week, 2 weeks, has just been this massive rotation here, out of the high-flying tech stocks and into more value or more of the beaten-down stocks. I mean, it's just, just going overall market without having to, talk about, the individual issues. I mean, it's just something in the past you're familiar with, you see this kind of rotation, different things in the market, or do you think this is maybe just, not just another buying opportunity with these tech stocks coming down, and you have a market that, for the next year or so would be looking something, more slated to the interest rate market, like bank stocks, or just give us your overall feel here on the massive sector rotation.
I am so not a market strategist, and I can tell you that I actually believed President Trump during his his campaign that he was going to drain the swamp. So I truly thought he was going to be at odds with a Republican Congress once elected, and I moved to 80% cash back in November. So dummy me. I mean, I missed this rally. It appears to me that the market likes certainty and hates uncertainty, and I think that as Congress gets nothing done on health care, the market just responds negatively. And obviously, healthcare is kind of essential for Congress to move on taxes. So again, I didn't vote for the guy. I'm not in favor of Obamacare repeal personally, but I think the market wants to see certainty with healthcare, certainty with tax rates, and we just don't have that right now. So as long as we're uncertain, stocks that are trading at well above market multiples are probably going to get pricey, and you're going to see investors take profits. And stocks that trade well below market multiples that look stable are probably going to attract capital. And I think this is normal. I've been in the business for 20 years, and I've seen this over and over and over again. But everything I know, I learned from Benziga. So
all right, we'll have to keep that one.
We will keep that one for the
year in review.
The year in review show. Thank you. I was missing my word there. All right, Michael Pachter, Wedbush, thank you so much for hopping on today. We'll talk to you again soon.
My pleasure.
All right, 8:52 now. How we doing, Joel? S&Ps, anything?
Yeah, we're just kind of on a slow drift north here. 28.50 up 3.5. I'm looking at that. If you're seeing that 29.75, folks, that high, that's not your high. We traded up to 31.25 yesterday. I'm not sure. I might have been the only one watching the spoos yesterday, but we traded up to 31.25. So that's the level I'm looking at on the upside. More comfortable with giving you a number on the downside here. This 24.20 level. Thursday and Friday's closes right there. Monday's lows right there. Where we sold off to on Monday right there. So there's your level, 24.20. I'm going to try and keep my bullish hat on until that level is taken out. Dennis, what do we have here? We have about 7 minutes left. Are there any stocks in the chat that we've overlooked?
There was a few here, actually, just from my Twitter account here. Just jumping back over to my Twitter. Tom McElroy, I think I'm saying your name right, wants to know about FRO, Frontline. And you know what? Interesting chart here again. You're starting to see what we've been talking about, some of the laggards showing some life. This is actually one that's a little bit better performer, but I always look at dry ships there, and dry ships actually trading up significantly here this morning. Not that it matters because everybody gets killed on that thing anyways, but it's up 25%.
Do you know why?
So could that spill over into a stock like Frontline? I think so. I think absolutely. So FRO has already been strong. I would be surprised if this thing challenges 6, maybe even today.
Long consolidation here. Just 540. Someone really stepped up here. Now back 580. Got a little gap to fill here at $6. So keep an eye on that. It opens up, but I like building a base if you're looking for a longer-term trade here. You definitely have an out here with that 535 low. And Spencer, there was some news out on dry ships, right, today? I thought
this morning.
Could you give us that real quick?
This morning, it's that they reported the successful delivery of the second modern Newcastle Max vessel. So they actually delivered something.
And weren't they getting sued for not to issue more stock? I thought something. That was on Tuesday, July 4th. Dry ships recently.
Well, they should have been sued for that a long time ago, I think.
I just don't know. I can't get really excited.
What is a lawsuit? Like, I mean, how do you stop them from doing? We had
an injunction.
Jeff Goldman.
It's an injunction to suspend further issuances of common shares below the certain price, saying that they're without merit.
Stop death spiral financing. It's basically what that lawsuit says. Obviously, we had Jeff Goldman on a couple months ago explaining death spiral financing, and that's why dry ships continues to go down as they continue to issue stock below the price, and then the stock starts to drift down over the course, and then you reverse split it, and it just continues to basically shares just continue to remain because they're issuing more, and then there's reverse splitting and bringing those back out. But what happens is the price of the stock just continues to leak. I mean, every time we look at this, the chart looks the same. The high from a couple months ago is 300, and the thing's at $1. So it's just a horrible and long-term investment, but it gets short-term squeezes in there because everybody is playing this probably from the short side that can play from the short side. So you get some crazy death squeezes in there sometimes where the thing can just blast off. Is this going to be one of those squeeze days? Well, if you shorted at $1.03 on Monday, it's squeezing you right now up 27%. It can be wild sometimes. We can see this thing go $2-3 sometimes, and then obviously gives it all back eventually. But I don't know. Doesn't look that great to me. Just one other stock I want to just mention here, just getting the beats right now. O'Reilly Automotive. I'm not sure what the headline is coming out of that, but it's down 20 points. ORLY is trading very actively in the pre-market. It's down 9.5%. Just started really getting hit here just in the last few minutes. Now down below $200. Do you have a headline there, Spencer?
I do have from 807. Same-store sales for the quarter up 1.7%. Not sure what the estimate was.
Obviously not good enough. So O'Reilly, not good to hear this morning. Stock was $292 back in the summer of 2016. Here we are a year later, almost 33% off sale here at O'Reilly.
Oh yeah, under $200. We haven't been under 200 since February 2015 when you had a low at 184.76. So still a lot of price discovery going on. Let's see what that pre-market low is right before the open. Right now, 202 looks to be your resistance here in the last couple brackets. So undefined support, 202 looks like resistance. Also coming out of the chat here, NUAN, and I see that one had some funky quotes on Monday as well. I believe this is Nuance Communications. Man, this thing, I mean, where do you just step in on a stock that's had 1, 2, 3, 4, 5, 6 down days in a row? Maybe at the $17 level, that's where you had a couple tops, and then you had to gap and go here. But at least get one day of it going up or an inside day or some kind of consolidation. But few bad days in a row may lead to one other. I do like 17, and I also see a couple lows just under 17. So let's see if the price will come to you.
Just a minute here left, so if there's any other things, let us know. I'll just give you a quick imbalance look again. Nike sell balance has grown to 223,000 to sell. There's some interesting ones here now. There's been some institutions that have come out. Ford, 279,000 to sell, so somebody's taking some profits in Ford. That's actually stock that I own in my investment portfolio. And even as a trade, I think on a pullback, I'd be interested in it just because I had the nice move, and you know how I like my 2-day move. Bristol Myers had some drug news, also ex-dividend, 51,000 to buy in Bristol Myers. Jumping over to Wells Fargo, 58,000 to buy. JP Morgan, 82,000 to buy. Bank of America, 198,000 to buy. Financial still catching a bit here this morning. Disney, 65,000 to buy. Visa, 47,000 to buy. Those are significant for their price stock. Kroger, 61,000 to buy. Exxon Mobil, 50,000 to sell. The oil stocks are getting hit here this morning. USO is trading down in the pre-market, now starting to fall off pretty substantially, and oil stocks are under pressure.
Yeah, and gold continues to move lower here, down 560 at 1217.40. Silver in the 15 handle, 1588. Still seeing some green here on your tech stocks, Apple, Microsoft, Google, and Amazon. Did we go over the Microsoft news? Did we cover that at all, Spencer?
We didn't mention that they have some layoffs. They're reorganizing their cloud.
Oh, that's right.
Their cloud sales. There's cloud sales force.
68. There's a level you need to keep on in Microsoft. All right, Spencer. Let's wrap up. Let's get it right. It's Wednesday's show, and see what's on the docket for tomorrow.
Already, almost the end of the week. Tomorrow we're going to hear from Rod Casilli. He is an options trader and the head of product at a site called Collective 2, and then we're also going to be joined by Aiden O'Leary from the Hack ETF. So going to hear from both those guests on tomorrow's show. As far as today's show, if you missed it or you want to just catch it again, you can do so on our podcast on iTunes, SoundCloud, and Stitcher by searching for Benzinga or PreMarket, or you can rewatch it again on Benzinga TV, that's Benzinga's YouTube channel. Don't forget to like us on Facebook and follow us on Twitter. Also, don't forget about Benzinga Pro. You can get a free 2-week trial today by going to pro.benzinga.com. It's our real-time news feed. Benzinga Pro, it's what we're using during the show. You can be the first to know with that. So have a good rest of your Wednesday. Good luck out there, folks. We will see you folks on Thursday.
Whether you're a short-term swing trader or a long-term investor, you need to check out Thinkorswim, brought to you by TD Ameritrade. There's a reason why Thinkorswim has been named the #1 trading platform, because it has it all. With Thinkorswim, you can trade stocks, options, futures, forex, and virtually every other type of order. Get notifications on mobile devices and interact with other traders in chat rooms. You can also use technical indicators and see the latest investing and trading education in Think Money magazine. If you want to keep up with the markets, you need Thinkorswim. To experience everything Thinkorswim has to offer, open a TD Ameritrade account today. Thinkorswim, the online trading platform for traders and investors. TD Ameritrade, member SIPC. All investing involves risks.